Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's update our view on euro currency. So today, as usual, we have prepared the fundamental report, and we're just not occasionally watching for earnings estimation by the major companies, transnational companies. So that's very important information that we've got. And in today's fundamental analysis, we have explained why currently we're keep an eye on the stock market as well. So previously, as you know, we rare or almost never have taken a look at the stock market because it was a lot of information beyond the stock markets that were able to give us the background fundamental to make an analysis. But currently, when we stand in a new situation where the statistics, well, it's actually lags a bit reality, because it's yet to be released, when it will just express and reflect the ongoing process in the markets a bit later. So we're just expecting, waiting for new releases of the gross domestic product, of the retail sales, consumption, and so on. That will be released only later through the year. But currently, we need to make the conclusion. We need to get some information what to expect. An analysis of the stock market, especially in the earnings report, gives us a chance to do this. And based on our analysis, I just do not want to bore you with details. So if you would like to know, you could read the fundamental report. But in 2 words, analysis of the stock market suggests and tells that investors underestimate the positive, negative impact on the global economy that could happen within 3-6 months. Because contraction of the earnings, expectation of the contraction of the earnings stands too small, even compared to the crisis of the 2007, 2008. While the initial drop of the stock market in the first months of this crisis, of the virus crisis, few times stronger than the drop of the market in the beginning of the 2008 crisis. This mismatch tells that we will get much stronger impact on the earnings of the companies within a few months. I think that's a 3-6 months, because earnings expectations usually lag behind the market for a few months. Why this is important for us, because we're trading on the forex market, what from that we could get? Well, that makes really a lot of sense, because if investors underestimate the negative impact, it means that within a few months they will be under negative surprise that global economy shows significantly worse pace of the recovery. A negative surprise on the forex market, as you know, leads to the demand for United States dollar. In combination of these factors gives us chance to suppose that in the longer term perspective, we should not take any bet on the euro recovery. So this crisis could last longer, and negative surprise will trigger demand for United States dollar, will keep the demand for the dollar on the high level. That's what we get from the fundamental analysis. So if you would like to know the details, you just could read this. Some interesting things indeed exist there. In the shorter term, you can see that trading swings are, well, market swings are really very, very narrow, and we return back to our setup that we have. Currently, we have reasons to suggest that this point, as you can see here, could be the early reversal inside of the widening swings on the market. So based on the market activity, well, the market forms the widening triangle. Usually, it shows the immediate breakout either to the upside or downside, or if it starts to show narrowing swings, it should keep some harmony, some symmetry. While here, this upper direction should be much greater, somewhere back to the top. We haven't got it, and we see early pullback here. That in turn could be early reversal, the sign of the weakness of the market, the sign of the failure to proceed high, to form a higher swing and keep the symmetry of this pattern, which means in turn that that could be starting preparation of the downward breakout on the EUR. Idea is mostly coincide with the fundamental background. And it means that in the shorter term perspective, we particularly will be watching for 110 area. So if we are correct, and market indeed will be able to hold below 110 area, especially on this minor pullback, that tells us that EUR is bearish, and we should be ready for downward continuation. Next target is LP is 106.10 approximately. We said that on Friday. It means that in the beginning of the week, we will keep an eye on the possible pullback and how market will respond first on the confidence resistance. It's 108.90. Next is the next 618 level. It's 109.86 approximately. So approximately around the C point. Since this reaction only on the COP target, it's not major target, we don't have any FIB levels, it should not be too strong. And I would suggest that it will be perfect if market will reach the confidence and turn down again. That's the perfect bearish situation. So, as you can see, we have two possible trading scenarios. Bulls could consider taking the long position with the target around the confidence, while bears should keep now on the same level where supposedly we should get some signs for taking the short position again. That's what we will consider on the coming week on the EUR. So, on the 4-hour time frame chart, supposedly the upper direction could take the shape of the reverse head and shoulders. So here we have the divergence, which is nice, which suggests the upper direction. And take a look. Potentially, it could be kind of the ABCD retracement in the shape of the head and shoulders. Of course, the swings could be a bit different, points could be a bit different, but the overall shape could be the same. And approximately we are keeping for this ABCD pattern. LP stands 108.75, which makes which actually very close to the confidence resistance on the daily, creates an agreement. XLP stands 109.50 approximately. But first, of course, as I said, this will be this area where we will consider possibly taking the short position. That's pattern that bulls could be used for a position taking. So it will be deep retracement somewhere to 107.50. Here we could consider taking the long position with a possible action to 108.90 on a daily chart. That's, in 2 words, what we will keep an eye on next week.